This on 20th of November 2022, and this is an update on the dollar. And last week, the Fed came out and they hinted that there will be another 75 point uh, increase on the interest rate. Uh, and that's why I think that the dollar is back on track. The investors are already reacting to the news, and the dollar is going to the moon. I think for the DXY, uh, we should go to maybe around 120, 125 for no for a country like Kenya. Currently, the exchange rate for the dollar is around 120, 121, but we could be headed to 140. Yeah. So on the US bonds, I was saying that these are just a pullback on the monthly time frame, and we look at the daily chart to see the rejection. Yeah, it's rising. So the yields they briefly touched around 3.6 before start rising again. So if the Fed come out on the next meeting, they increased the points to 4.75, and the yields they are at 3.8. Now remember the bold yields they increase when the currency interest rate increase, and they have to, because bonds are these are loans. These are loans that they are designed in such a way that governments and corporations can borrow loans to raise money. So if the interest rates of a currency increase, of course the cost of borrowing money goes up, and since bonds are loans, the yields have to go up. So this is just the cost of money, and these bonds. Most of the forex traders, they are always talking about how huge the forex market is, but it's very small compared to the bond market. Yeah, so it's accurate that we start our analysis from here, so that when 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 uh, the bonds, when the market moves, the bonds move. The effect now the triples through the currencies and the stocks, because it's a very big market. It's very huge compared to the forex market. It's a world debt. It's a world debt market. So these are I mean the 10-year bond. I think it found support around here. which was the previous resistance here, and with those hawkish remarks from the Fed, it's only fair that we go to the top and even break out to the top. Uh, so as we do that on the bonds, on the DXY, same case. So it did not touch the 103 as we expected, but already you can see some resistance. As soon as the Fed came out and hinted that they would be increasing the rates, now the market just reacted. Okay. So if we want to see it clearly, so on the monthly time frame, there is a week being left on the downside. Okay. So I think we'll not only break the 114, 115 previous high, but will be headed to, I think the next stop will be around here. Now, when you zoom out, you see the where the market is likely to find resistance on the longer time frame, and that's on 120, 121 price zone. So I'll be sending this chart to my social media platforms. Yeah, so that's where we're headed for the dollar, and yeah, I think that's it. So as the dollar is going to the moon. Now we can look at the currencies that present the best opportunities. And we're looking at gold. Uh-huh. So this is the analysis we did previously. So on the previous analysis, you can see that the market is already. So for me, I was taken out. My stop loss was taken out. So it's a normal thing, but the stop loss is a must. So I've not yet found another entry. But if we go to this first time frames, these are the consolidation. Remember, we need to see some consolidation before we can see the market turning. But yeah, on the monthly time frame, and the charts are almost similar. Now, when you look at this monthly candle on the gold and the monthly candle on the DXY, see, the another one is the monthly candle on the US 10 year. See, they are all leaving a week behind. So in the case of the gold, yeah. So at some point, when the Fed came out and said that they'll be increasing the rates, the sellers started coming in, and how far it will go, I cannot say, but we might be headed for this one. Okay, 1400. I think it's only fair that when the DXY goes to 120, now gold will come to around 1400. Okay, for those who love trading gold, I think the dominant trend now is bearish. If if the bond yields will be increasing and the dollar, the DXY is rising. Okay, so for the currencies, again, these are an update. You can see already we had highlighted the zone, but if you want to see it clearly on the faster time frames, the consolidation. So so these are the consolidation. The slower time frame, the faster time frame. So we are yet to see the breakout to the downside. So I think for those who will not have the opportunity, you can wait for the breakout. Now, when the price breaks out here on high volume, you can sell the euro dollar. Now, your stop loss should be above this price price congestion. So let the price action set a natural barrier for you. So if the price breaks out here, then we'll automatically know that we are wrong. But if the price comes up here again and goes down, that does not mean that you are wrong. So your stop loss, let the price set the natural barrier for you. Stop loss should be around here, your entry around here. And of course, the risk to reward ratio, you're anticipating around 800 pips. Of course, and I wait for another breakout here. So it's more than 800 pips. Yeah. So this is a setup that you should not miss. Yeah, because the dollar has been bullish since for the last almost 6 months. I think for the whole year, the dollar has been very bullish, and now we have this is an opportunity to this is a pullback. Yeah, and you don't you join the trend on pullbacks. Yeah, so you can see from last year, September, July, June, all these downtrend. We've not had a major pullback like we have now. And again, this is a pullback that is coinciding with the previous support, a place where price paused and reversed before. And on the fundamentals, we can say that the dollar, they want to keep to increase the interest rates to fight inflation, because even with those because for the last four meetings, the Fed has been increasing the rates with 0.75 points, but still the inflation is not under control. So of course they'll have to keep on increasing rates. So on the GU, same case. These are pullback that since price started dropping from here. That's 2021 June. For almost 1.5 years, we've not had a major pullback like we have now. And again, this pullback is coming in at a very significant price zone where price reversed before. Yeah. And when the Fed is set to increase the rates. So on the slower time frames for GU, you can enter. So the GU is still at the top, and remember these are all probabilities. Don't go risking your account with big lot size because you are the developer saying that sell GU, sell Euro USD. So these for GU, these are a good opportunity. But if you're conservative, and just wait for the breakout, and then enter on the breakout. Stop loss, let the price set the natural barrier for you. Stop loss around 1.3, 1.2, 1. So, of course, the stop loss is a huge, but what about the reward? What about the potential reward? At the current level, from 1.8 to 1.03. So, almost 1,500 pips. So you can risk these 200 rand pips for one 1,500 pips. So a risk to reward ratio of more than one is to 5. So it's worth I think it's worth risking. So this week as the market opens, just look out for those two opportunities. Uh, and remember when you enter, you enter with these are swing trade. It's not a scalping. Entering, exiting every day. It's good that to manage your emotions in this market, you hold. Yeah. So these are it's on Sunday, and the market will be opening tonight. So watch out for those two opportunities.